Mickey Dickey here with the update for the week of February 17th, 2023. And again, what I'm looking at here are trends. And just to give a quick update, now this is during the day on Friday, so this isn't the ending part of the day on Friday, so these numbers are not totally finished for the day. But basically, we're up just under 12% for the NASDAQ for the year, 5.7% for the S&P, and 1.25% for the Dow. For the NASDAQ is dead even. The S&P and the Dow are down not quite 1%. Biggest trends on that are the fact that we're even, almost deadly even for the last 4 weeks, which given the fact that CPI came in hotter than expected, PPI came in high, and we have had some unemployment numbers and employment numbers that have come in hotter than expected, which again, I continue to say is a very positive thing. The economy is strong, the employment is strong, all these things are strong. So long-term, this is a better thing. And I know we keep hearing all these weird things from the government that are on television and how these are bad, we're going to have to raise rates. Here's what I want you to look at on this. When we start looking at inflation, look at these trends that we're coming up against. Last year's numbers are all this high. And we started off the year at 6.4, which is down 0.1 from December. When we start running into these numbers that are higher, mainly based on gasoline, next month's probably not going to be a spectacular inflation reduction month either. Probably going to be down 0.2, maybe if we're lucky 0.3 and get under, the 6 handle. But where we're going to start seeing it is in March, unless oil prices continue to go up, which they're down. So hopefully the natural oil prices will be down. But if we start running into a 4.3 or $4.30 a gallon versus say $3.60 a gallon we're at today, that's a 16% decrease versus an increase we were in January. So please keep that in mind when we start running these numbers. And unless oil continues to go up the rest of the year, you're going to run into these numbers. So inflation should continue to come down, which will be a positive thing. So again, the numbers what we're looking at are is unemployment going to go up and is real estate going to roll over as well? But when we look at all the numbers, they should be going in our direction. So what I'm happy about is that back here, when we had inflation go from 8.3 to 8.2, we had the 5th worst day in the history of the S&P this day. That was the sell-off that we had at that point. We have not had that sell-off when we did it today. So to me, that means the market is stronger, economy stronger, everything's looking better. So yeah, okay, I think some people were thinking that the Fed wouldn't get to 5. It kind of looks like maybe they're going to get to 5 at this point, unless something changes that we don't see. But if everything continues on the course that it's on, we're probably looking at that way. Now, the other part we look at are the stocks that I had for this week and how did they do this particular week. We started off the week on Monday, which again, I normally don't have a whole lot going on Mondays. But what ended up happening is you had Avis came out and had a really good quarter. Things went up. I was looking at iRobot, but again, iRobot's getting purchased, so keep that in mind. And it's still at a discount from the purchase price from where they're going, assuming the Department of Justice doesn't get involved in that one as well. Denny's did well and went up. You had Solar Edge, which had a good quarter, initially went up, and throughout the rest of the week gave it all back. Palantir had a great week, went up. Again, CPI came out on Tuesday. We had Airbnb, which went up, did well. Coca-Cola did well. Devon Energy and Trip came out and did the opposite of what Expedia did. Wednesday, we had Cisco have a really good quarter, which we still have people questioning the CEO, whether he knows what he's talking about, because he gave really good guidance. Shopify kind of dropped off the planet. Manulife, which was one of them I talked about that a lot of you may not know, has a nice dividend, had a really good quarter. Welltower had a good quarter. Roblox had a good quarter. AWK had a disappointing quarter, so keep that in mind. Zillow did well. Generac did well. So again, what's nice, again, all these were good quarters for these people or for these companies, and the market. Now we've had some start to come back. Now the ones I really want to focus on here on Thursday, Southern did not have a great quarter, has a really solid dividend, getting really close to its 12-week low or 12-month low. Datadog had a good quarter, but had poor guidance, so it went down. Vulcan Materials, 40 PE ratio, didn't have a great quarter, upped its dividend, didn't do that well. DoorDash did well, not great guidance, went down. Paramount actually did pretty well. Dropbox, same thing, be it on top, be it on bottom, low guidance. Hasbro, which had previously come out and reported that it wasn't going to have a great quarter, had a little better than they expected, so keep that in mind. TSEM came out, had a good quarter, but is basically giving it all back. So, and then today we had John Deere had a great quarter, but getting kind of close to its 12-month high, and you know, it's an 18 PE ratio, so keep that in mind. Draftkings came out today, or last night, I should say, after hours. Great quarter. Everything kind of popped and did well for them. So we'll have to see whether that holds, because one of the trends I'm seeing here is that some of these companies that are higher multiples, growth stocks, they're getting a pop when they get their earnings out because they've been better than expected, especially if they give better than expected guidance, which DraftKings did. They were going to talk about $3 billion, which is an interesting deal. And again, I'm not suggesting any of these stocks, but on this particular one, if you go back to 2019, they did $300 million in sales total for the year. And they're projecting to do $3 billion this year. And the stock price is the same as it was in 2019. You know, take that with as many grains of salt as you wish, not saying it's good, bad, or indifferent, but if there's any validity to any of this, to think that a company that was doing 300 million is now doing 3 billion and the stock price is the same, not really having a hard grasp in that concept real well. But so anyway, what we found from this week is that the market did not just completely, you know, sell off with some of the stuff that we had going on over the last week, which is solid. The question really becomes, what do we see going forward? The market's really going to probably anticipate the fact that the Fed's going to raise. Okay, the question is, do they raise? There's been some question whether they're going to raise 0.5% at the next meeting. Is it going to be a quarter? I think a lot of it's just going to depend on what happens between now and when they meet again. And we're going to have one more CPI and PPI print before they meet. You know, again, if it's another lackluster performance, do they do 0.5%? You know, who knows? It's very probably on the table. So again, a lot's going to be pushed onto this next CPI and PPI print, which, you know, is kind of crazy that we're pushing this much on it. But, you know, the market's just really hanging on what's going to happen with these guys down the road. So going back to my biggest thing that I keep track on here again, the trends are holding. The market's still okay. We're not going crazy. And when you look at when we're up from the bottom, really, we kind of haven't done anything different in the last 4 weeks. So we're still up 16, 17, and 18% from the bottom, and we're still down 27, 15, and 8 from top. So we're kind of in that range where we could really go one way or the other. And my concern during this time period for most of my clients was, do we just sell off like we have in the past? When you go back and you look at the last 12 months, and not to look at an individual stock, although I'm seeing more of a, you know, a bottom here than just an up and then a down. So, you know, the question, we had a little bit of that here, you know, do we do that again? But even that didn't go all the way back down. So as we start looking at these trends, you know, it's really going to depend on what happens with CPI and PPI and what happens with Powell going forward. So, but the trends continue, the market continues. So continue to invest what's best for you. Keep an eye on there's good quality stocks out there. There's good quality investments out there. But stick to your plan, because we want to make sure that you can retire when you want to retire and how you want to retire. Tiki out.